Welcome to this step-by-step walkthrough of filing Form 990EZ using Tax 990's form-based interface. In this demonstration, we'll walk through a complete example so you can see exactly how each field is filled out. We'll be using a sample nonprofit, New Hope Community Outreach, a 501c3 organization based in South Carolina. For the 2025 tax year, the organization has a total revenue of $145,000, total expenses of $121,000, and ending net assets of $84,000. We'll use these numbers consistently throughout the form so you can clearly understand how each section connects. Starting at the top of the form, select the tax year, beginning January 1st, 2025 and ending December 31st, 2025. In the checklist section, no boxes are checked because this is a standard annual return, not initial, final, or amended. Now enter the organization details. If you're using Tax 990, much of this information is already pre-filled. That's because your organization profile, including the EIN and basic details, is typically entered before you begin the form or when the organization is first added to your account. So in most cases, you'll simply review and confirm the accuracy of the information shown here. For our example, the details are as shown. For the accounting method, we'll select cash method as this is common for small nonprofits. We'll enter the website and then choose the tax-exempt status, selecting 501c3. For the form organization, we'll select corporation. At this point, your organization profile section is complete. Now we move into part 1, revenue. We'll enter actual example values. New Hope received donations from individuals and grants. Individual donations were $80,000 and small foundation grants were $25,000. So for the total for line 1, we'll enter $105,000. Let's click Add Contributions. This opens a pop-up where you can report the total contributions received during the tax year. At the top, you'll see two options, total contributions and contribution breakdown. If you already know the full amount, you can simply enter the total here. For our example, we'll enter $105,000. This represents all contributions received, including individual donations and grants. It's important to note that this should be the gross amount, meaning you do not subtract any fundraising expenses here. Below, the system provides helpful guidance on what to include and what not to include. You should include cash donations from individuals or organizations, grants received, bequests and gifts, and non-cash contributions at fair market value. You should not include membership dues with benefits, program service revenue, fundraising event income, and investment income. If you want more precise reporting, you can switch to the Contribution Breakdown tab. This allows you to categorize different types of contributions, and Tax 990 will automatically route them to the correct fields on the form. Once your value is entered and reviewed, click Save and Close. You'll now see that line 1 is populated with the total contribution amount. Now let's move to line 2, Program Service Revenue. This line is used to report income earned directly from activities that support your organization's mission. Unlike donations, this is earned revenue, meaning the organization provided a service in return. Common examples include program fees, tuition, workshop registrations, or payments from government contracts. For our example, New Hope Community Outreach generated income by hosting community workshops aligned with their mission. So for line 2, Program Service Revenue, this represents the total amount collected from those services during the year. We'll enter $15,000. It's important not to include contributions or donations here. Those belong on line 1. This line should only reflect revenue where a service was provided in exchange. Now let's move to line 3, Membership Dues. Click Add Membership Dues to open the detailed entry screen. Here you will report the total membership dues collected during the year and allocate any portion that represents benefits provided to members. For our example, New Hope Community Outreach collected $5,000 in total membership dues. Enter that amount in the Total Membership Dues Received field. Next, you'll see a field for value of benefits provided. This is important because if members receive goods or services in exchange for their dues, such as access to facilities, publications, or member-only events, the fair market value of those benefits must be separated. For this example, Let's assume members receive newsletters and discounted event access valued at $1,500. Enter $1,500 as the value of benefits provided. Here's how this works. The $1,500 is reported as membership dues on line 3. The remaining $3,500, which exceeds the value of benefits, is treated as a contribution and included in line 1. This ensures the IRS properly distinguishes between earned revenue and charitable contributions. If your organization does not provide any benefits, you can simply enter 0 in this field, and the full amount will remain on line 3. Once everything is entered, click Save and Close. You'll now see line 3 populated with the appropriate membership dues amount. Now let's move to line 4, Investment Income. This line is used to report income earned from the organization's investments. This can include interest from bank accounts, dividends from stocks, or other passive income sources. For our example, New Hope Community Outreach earned interest from its savings account during the year. We'll enter $2,000. This amount should reflect total investment income earned, not the account balance. Next is line 5, Sale of Assets, which is broken into 3 sublines. This section is used if your organization sold assets such as equipment, property, or other non-inventory items during the year. Line 5A, Gross amount from sales of assets. This is the total amount received from selling the asset before any costs are deducted. Line 5B, Cost or other basis in sales expenses. This includes the original cost of the asset and any expenses related to the sale. Line 5C, Gain or loss. This is calculated by subtracting line 5B from 5A. In our example, New Hope did not sell any assets during the year, so all values remain $0. If your organization does have asset sales, this section ensures that only the net gain or loss is included in your total revenue. Now let's take a closer look at line 6, Fundraising Events, which is broken into multiple sublines. This section is used to report income and expenses from events like galas, auctions, or fundraising dinners. For our example, New Hope hosted an annual fundraising gala. Line 6A, Gaming Income. This is only used if your organization conducts gaming activities like raffles, bingo, or casino-style events. In this case, New Hope did not have any gaming income, so we'll enter $0. Line 6B, Gross Income from Fundraising Events. This is the total amount brought in from the event before expenses. For example, ticket sales, sponsorships, and auction proceeds. We'll enter $20,000. Because New Hope reported more than $15,000 in fundraising event revenue on line 6, the IRS requires us to complete Schedule G, Part 2. This schedule provides a more detailed breakdown of each fundraising event, including how much was raised, how much was contributed, and the direct expense associated with the event. Let's walk through this using our example. First, under event number 1, enter a description of the event. For example, Annual Fundraising Gala. Line 1, Gross Receipts. This is the total amount collected from the event before any deductions, including ticket sales, sponsorships, and auction proceeds. We'll enter $20,000. Line 2, Less Contributions. This is where you would enter any portion of the event revenue that qualifies as a true donation, such as when a donor pays more than the fair market value of goods or services received. In our example, we treated all event revenue as program-related income and not contributions, so we'll enter 0. Line 3, Gross Income. This is automatically calculated as gross receipts minus contributions. $20,000 minus $0 equals $20,000. Now we break down the costs directly associated with the event. For our example, total direct expenses were $8,000, and we'll categorize them as follows. Line 6, Rent or facility costs, such as the venue rental for the event, was $3,000. Line 7, Food and beverages, catering and refreshments, for example, $4,000. And line 9, Other direct expenses, such as decorations, supplies, and event materials, $1,000. Other lines, such as prizes or entertainment, can be used if applicable, but are not needed in this example. Line 10, Total direct expenses. This is the sum of lines 4 through 9, which equates to $8,000. Line 11, Net income from event. This is calculated as gross income minus total direct expenses. So $20,000 minus $8,000 equals $12,000. This final amount should match what we reported earlier on Form 990EZ, line 6D. Schedule G ensures that fundraising activity is fully transparent by showing what was raised, what portion was contributions, and how much it costs to generate that revenue. This level of detail helps the IRS evaluate how efficiently the organization conducts its fundraising efforts. Line 6C, direct expenses. This includes costs directly related to hosting the event, such as venue rental, catering, decorations, and event materials. We'll enter $8,000. Line 6D, net income from events. This is calculated by subtracting expenses from gross income. So that will be $20,000 minus $8,000, equaling $12,000. This net amount is what ultimately contributes to your total revenue on the form. Next is line 7, sales of inventory, which applies if your organization sells physical goods like merchandise. In our example, New Hope sold branded shirts and books. Line 7A, gross sales. This is the total amount collected from selling inventory before any costs are deducted. We'll enter $10,000. Line 7B, cost of goods sold. This represents what it costs the organization to produce or purchase those items. For example, printing shirts or buying books. We'll enter $4,000. Line 7C, gross profit. This is the remaining amount after subtracting costs from sales. So $10,000 minus $4,000 equals $6,000. This profit amount is what flows into your total revenue calculation. Now let's move to line 8, other revenue. Click Add Info to open the detailed entry screen. This section is used to report any income that wasn't already captured in lines 1 through 7. This can include things like rental income, royalties, or other miscellaneous revenue sources. For our example, New Hope Community Outreach earned income by renting out their facility for community events. In the explanation field, enter a clear description. For example, facility rental income. Next, enter the amount, $5,000. This ensures transparency and provides the IRS with context for the revenue being reported. If your organization has multiple sources of other revenue, you can click Add Another to enter each one separately with its own description. Once all entries are complete, click Add and then Save and Close. You'll now see the total reflected on line 8. Now we arrive at line 9, total revenue, which brings together all the revenue sources we've entered so far. This line is automatically calculated by adding the applicable amounts from lines 1 through 8. It represents the organization's total income for the year. Let's walk through how this total is built. Contributions, line 1, $105,000. Program service revenue, line 2, $15,000. Membership dues, line 3, $5,000. Investment income, line 4, $2,000. Fundraising events, net, line 6D, $12,000. Inventory sales, profit, line 7C, $6,000. And other revenue, line 8, $5,000. It's important to note that for certain sections, like fundraising events and inventory sales, only the net amount of profit is included in the total, not the gross figures. When we add all of these together, total revenue will equate to $150,000. This number represents the organization's total income resources for the year and will be used in the next step to calculate net income after expenses. At this point, we've completed the revenue section of Part 1 of Form 990EZ using a full working example. You've seen how each revenue category is entered, how different types of income are properly classified, and how those amounts flow into your total revenue on line 9. Before moving on, take a moment to review your entries and make sure all revenue sources are accurate and complete. In the next part of this series, we'll continue with Part 1 by walking through the expenses section and completing the remaining calculations to determine net income and ending net assets.